Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. And today we have a story that involves a company acquiring another company and raising money all at once. Talk about a busy few weeks. Let us dive into this latest filing from Lifeward Ltd. On the 12th of January 2026, Lifeward announced some major moves, a key acquisition, and a significant fundraising effort. This filing tells us all about the handshake deals made and the money changing hands. It looks like Lifeward is making a bold play to grow, and they are bringing in some new partners to help them do it. First things first, Lifeward Ltd is already trading on the Nasdaq Capital Market under the ticker symbol LFWD. They have ordinary shares, no par value. This means their stock is available for public purchase and sale on a major exchange, which is always a good sign for transparency. The big news here is what is called a share purchase agreement. Lifeward is buying a company called Orotec Pharma Incorporated. Orotec is currently owned by Ormed Pharmaceuticals Incorporated. This means Lifeward is acquiring all the parts of Orotec. The agreement lays out that Lifeward will issue new shares of its own stock and something called pre-funded warrants to Ormed. Now, what does this mean in simple terms? Lifeward is giving Ormed a substantial chunk of ownership in Lifeward, possibly up to 49.99% of the company when everything is counted. This is a huge deal, and it suggests Ormed will become a very significant stakeholder in Lifeward after this transaction closes. There is also a clever bit of financial engineering. A portion of these pre-funded warrants will be held back. This is like a down payment for any potential problems that might come up after the deal is done. If Ormed has to cover certain costs related to the deal, then these held back warrants are theirs to forfeit. If all goes well, they will get them later. It is a way to secure Lifeward against future liabilities from Ormed. Beyond the equity stake, Lifeward is also giving Ormed what are called transaction warrants. Think of these as options to buy Lifeward stock at a set price of 45 cents per S-hair. The number of these warrants they get depends on how much cash Lifeward has when the deal is finalized. This is another incentive for Ormed and a way to align their interests with Lifeward's future stock performance. But that is not all. Lifeward will also share a portion of its revenue with Ormed, specifically 4% of the net revenue from their Rewalk personal exoskeleton products will go to Ormed. This revenue sharing will continue for 10 years, or until Ormed receives a certain maximum amount, or until Lifeward's market value reaches $200 million. This shows Lifeward wants Ormed to actively support the success of their existing products. To make sure all these new shares and warrants can be legally traded and to keep the SEC happy, Lifeward has to file something called a registration statement. They have a deadline of around 75 days to get this paperwork approved by the Securities and Exchange Commission. This is a standard but crucial step in these kinds of transactions to prevent immediate selling pressure and maintain market stability. There is also a lockup agreement. This means Lifeward's top executives and Ormed cannot sell their newly acquired or existing Lifeward shares for 120 days after the deal closes. This is super important for investor confidence. It signals that the key players believe in the long-term value of the company. Now, for the fundraising part, Lifeward did not stop at just the acquisition. They also entered into a securities purchase agreement. This is where they are raising cash. They are issuing something called senior secured convertible notes to Ormed and other investors. These notes are essentially loans that can be converted into Lifeward stock later on. They are looking to raise a total of $20 million. This is split into two tranches of $10 million each. For each loan they issue, they also give out warrants, which are those options to buy stock at a fixed price. So they are raising capital and giving away more potential equity. These notes have a 3-year lifespan. The investors can convert their loan amount plus interest into Lifeward shares at a price of 45 cents per S-hair. This is the same price as some of the other warrants. This conversion price can also adjust under certain conditions. The interest rate on these notes is 8% per year. However, if Lifeward defaults on these loans, that interest rate jumps to a hefty 15%. That is a significant penalty, showing the risk investors are taking. The interest can be paid in cash or added to the loan balance, which is common for convertible debt. The accompanying warrants, the common warrants, are also exercisable at 45 cents per S-hair. These are structured to give investors a chance to benefit from any rise in Lifeward's stock price above that 45-cent mark. As with the convertible notes, there are limits on how many shares can be issued if Ormed and its associates already own too much of the company. By issuing these convertible notes, Lifeward is creating a direct financial obligation. This means the money they borrowed is now a liability on their books. It is a concrete debt that needs to be managed. The securities being sold in this fundraising effort are being sold without being officially registered with the SEC upfront. This is allowed under certain exemptions for private placements, typically to accredited investors who are assumed to be sophisticated enough to understand the risks involved. The company has committed to filing registration statements later to make these shares freely tradable. In light of these new partnerships and investments, the board of directors at Lifeward is going to change. After the acquisition is complete, the board will have 6 members. 2 will be chosen by Lifeward, 2 by Orem, and 2 will be independent directors to meet Israeli legal requirements. This is a clear indication of Orem's growing influence within Lifeward. To get the word out, Lifeward issued a press release on the 13th of January 2026. This is a standard practice to inform the public and investors about significant corporate actions like these. The press release is included as an exhibit to this report. Okay, so let's pull it all together. Lifeward is buying Orem from Orem. This means Lifeward is getting new technology or a new business line from Orem. In exchange, Lifeward is giving Orem a significant ownership stake in Lifeward itself, possibly a controlling interest, and also some warrants which are like options to buy more stock in the future. On top of that, Lifeward is raising $20 million by issuing convertible debt to Orem and other investors. This debt also comes with warrants. The whole deal is designed to fuel Lifeward's growth potentially through the integration of Orem and by providing substantial capital for future operations or expansion. So what is my take on this whole situation? Lifeward is making a very aggressive move here. Acquiring a subsidiary and raising a significant amount of cash simultaneously shows a high degree of ambition but also a high degree of risk. The core strategy seems to be a combination of inorganic growth through acquisition and the infusion of capital to either support that acquisition or fund future endeavors. The biggest strength here is the potential for synergy and scale. If Orem has valuable assets or technology that complements Lifeward's existing business, Lifeward could see a significant boost. The capital raised $20 million is also substantial and could provide Lifeward with the financial runway it needs. However, the risks are also considerable. Giving up almost 50% ownership in Lifeward to Orem is a massive dilution of existing shareholder equity. Orem will have a huge say in the company's direction, and the 45-cent conversion price for all these new securities means that if Lifeward's stock price doesn't significantly outperform that price holders of these notes, and warrants might convert, making the existing shareholders own a much smaller piece of the pie for less immediate value. The interest rate on the notes jumping to 15% in case of default is also a stark reminder of the financial pressure Lifeward might face. A notable opportunity is the potential for Lifeward's rework products to benefit from Orem's influence and potentially increase distribution channels or strategic direction. The revenue sharing agreement with Orem ties their success directly to Lifeward's existing product lines, creating a win-win scenario if those products perform well. In conclusion, Lifeward is taking a bold leap. They are betting big on the integration of Orem and the strategic partnership with Orem. The success of this multi-tiered deal hinges on Lifeward's ability to manage its expanded operations and debt obligations while delivering on the promises implicit in this significant equity and debt issuance. It is a situation worth watching closely to see if this ambitious strategy pays off for the company and its shareholders. Alright, that is our breakdown of Lifeward Limited's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.